What a celebration here at the New York Stock Exchange. BKV, a natural gas producer, opening its shares on the market to debut. It's going to be IPOing. We haven't seen that stock open just yet, but perhaps in just a bit of time after this opening bell. Joining me now to talk about what we see in the overall market is Thomas Hayes. He's a chair and managing member of Great Hill Capital. Thomas, always great to have you with me. And the market's so in focus today, especially after some of these stimulus measures out of China overnight. What can you tell us?
This is enormous news. This is a regime change. This is a game changer. The Chinese government finally released the stimulus bazooka that everyone has been waiting for. And if you look at it now, the green light is on. So you've got the U.S. trading at 22, 23 times for good growth. But in China, the growth is now going to start recovering, and you're trading at 8, 10 times for some of the biggest companies in the world, like Alibaba, the #1 cloud provider in Asia, like Tencent, like so many. So the market is very excited because if growth comes back in China, which it will, they said we're going to do whatever it takes. This is a big deal. That's going to be good for all the developed markets as well.
And certainly we see U.S. stocks opening higher today, still within those record high territories. The NASDAQ leading the way, the NASDAQ composite that is, tech stocks, and certainly solid economic data. What we saw overnight in China with these stimulus measures, do you foresee an impact on U.S. stocks?
I do, in the long term, okay? So this stimulus, you're going to start to see growth come back in China. That's going to help U.S. companies. If you recall, companies like Nike have been down because of China worries. Estee Lauder has been down because of China's worries. Starbucks has been down because of China worries. So all these companies are going to benefit as that growth comes back. They're issuing $286 billion of bonds for fiscal stimulus. Everyone said, well, the monetary stimulus is great. We need fiscal, we need fiscal. They said, it's coming, and it will do as much as it takes. So all the multinationals are going to be big beneficiaries of this stimulus overnight. We're pretty excited about it.
Well, in terms of excitement, we see executives from BKV, this company set to IPO today here at the New York Stock Exchange, signing the wall after that celebratory opening bell podium. We'll be speaking with those executives, including the CEO, momentarily. I'd love to get your take, Thomas, as an investor with a wide aperture as to what you make of the natural gas space.
I love it. As you know, Kristen, for many years we've talked. I'm a contrarian. I like to buy what's out of favor, what's high quality value out of favor, and I think natural gas right now is an opportunity of a lifetime. It's trading in the doldrums. No one wants it, and the demand for energy is going up, and it's the cleanest energy that we have plentiful sources in the United States, unlimited amounts. So companies like this going public, we own a company called Comstock Resources, which Jerry Jones owns 71% of the equity. He's the owner of the Dallas Cowboys. So I think they're going to do well. I think Comstock's going to do well. We've got a little bit of Range Resources that we've owned for some time. That's up quite a bit. So this is the time to be buying China. This is the time to be buying natural gas, and I think their timing is perfect.
Okay, great. Well, I'm sure the executive might want to talk to you, Thomas, after this market open here, a strong market open that we see at the stock exchange. As we look to round out the third quarter, September, we see decent gains, record highs. Investor sentiment seems to be strong. Heading into the fourth quarter, we'll have a new factor like the election. What's the state of play right now for U.S. markets?
I think the Fed, with the front-loaded rate cut last week, cemented what we've been calling for a regime change for many months. So we're going to have a shift. You have to be selective. You can't just chase those Magnificent Seven anymore. Unmagnificent 493 is going to outperform Magnificent 7. Why? Because their earnings growth is accelerating while Magnificent 7 earnings growth is decelerating. Small caps outperform large caps in the first 12 months after a Fed cut by 11%. So you want to be small caps. Value outperforms growth in the first 6 months after the first Fed cut. So you want to have some value exposure. Everyone's crowded into defensives. They've been crowding into staples and utilities. We think discretionary is going to outperform. So the Nikes are going to come back. The Lulus are going to come back. The VF Corps are going to come back. And last but not least, actually most important, emerging markets is going to outperform developed markets. That's in part due to a weaker dollar. The dollar is going to trend lower in coming months and years. That helps emerging markets. The stimulus in China helps emerging markets. So all the places that have been left for dead, now it's Christmas time. It's opportunity to go shopping. So we're pretty excited.
Okay, opportunity to go shopping. I always like that reference here, Thomas. So when it comes to overall conditions, obviously that is key in the IPO market. Hopefully we'll see more of these international companies going public here at the stock exchange. What else do our viewers need to know, especially as they factor the election into their equation?
Yeah, I think this is a big thing because historically since 1955, you tend to get a lot of volatility in October ahead of the election. So U.S. stocks have run up a little bit, particularly the Magnificent Seven, which is such a heavy weight. So you have to be careful. You have to be selective. If you're on margin, you might want to come off a margin. Don't be too aggressive. But we're staying fully invested. We'll ride out any bumps. And then I think after the election, once you get that certainty, doesn't really matter as much who's elected as president, so long as you have gridlock, not one party in the Senate, House, and president. As long as it's mixed, we're going to get a year-end rally after that. So be a little careful. The option skew, which is the cost to ensure 1 and 2 standard deviation corrections, just hit a 10-year record, which doesn't mean you automatically get a correction, but it just means be on alert for a little bit of volatility in October in case it shows up. So off a margin, stay invested, ride through the bumps, and I think by year end you're going to be smiling so wide you could eat a banana sideways. So.
Thomas Hayes with Great Hill Capital. Thomas, thanks so much for joining. Great to get your take this morning. And let's take a